another fine day of well, hot weather where I am, sunny weather, and notably, I'm noticing on the silly peanut gallery that is the crypto market analysis world, there's a lot of jibber jabber about which asset will do best in the coming expected continuation of the upmarket, which many analysts believe is set to continue for the duration of the next 12 months, maybe 18 months, before we see another great big pullback, as we often do in crypto. And I have to say, it's a load of hogwash. We don't know if we're at the top now, there's going to be a big pullback before there's another run up, or if it will in fact continue up. All we can say is what the leading information tells us, and we look at the probabilities and the statistics thereof, and decide based on the leading information which direction to take any given trade. Now, as a long-term holder, that is a different story, because the answer is it doesn't really matter if it goes down or up first. Since it appears in the long term these assets will continue to rise in their perceived value as adoption increases and as network power grows for all of them. Now, am I a fan of all of these tokens? Well, I do like Bitcoin, and I think Solana has some very interesting potential, although it's not really, a truly decentralized cryptocurrency, since it is centralized. So what does that mean? Well, it means a lot, really. And frankly, Ethereum, as popular as it is, as popular as it may be once an ETF is actually launched, I believe Ethereum is the one with the biggest fundamental flaws in terms of its technology. By the way, notice all the wheat has been chopped here in recent days. All the hay, or the wheat, it's hay actually, has been chopped and bundled up to be used as feed. Anyway, a commodity. Hey now. Ethereum has the greatest fundamental problems, notably because of their gas fees, which are prohibitive to most retail users when transactions can very often cost far more than the actual value of the transaction, simply because of the gas fee that is attached to it. Meaning, if you have to send somebody $100, it's not uncommon for the network to ask you for $300 or $400 because of gas fees, which are paid in Gwei, like the equivalent of Satoshis on Bitcoin. Gwei are the individual units that make up an Ethereum coin. And the problem with that scheme, and it is a scheme, or a scam, whatever you want to call it, because at the very least it's a scheme, is that when you're charging more for just the gas than you're charging for the actual transaction, right? When the transaction value is X, and you charge 2x, 3x, or even 4x just for the transaction to be carried, you disincentivize users from using that network. Now, are there times when Ethereum fees are more reasonable? Sure. But if you look at, the average cost of an NFT transaction these days, or any other regular Ethereum transaction, it is really not uncommon to see astronomical, exorbitant, and frankly just ridiculous prices where you're paying more for the gas than the actual transaction itself. And that is one of the big downsides of that network, especially considering there's really no plan in place to do away with it that is coming up in any estimated time of arrival. And it looks like they're just going to continue that as long as they can, or until they're really forced to change it by greater market forces. And that, we will see if that happens once there is actually greater adoption of Ethereum. But for the immediate forecast of, let's say, the next 12 to 18 months, during the supposed ongoing bull cycle, which is really just a silly word for more buy pressure than sell pressure, for a good 12 to 18 months, it is very likely we will see Bitcoin and Solana and Ethereum all rise, frankly, because there will simply be more adoption across all assets, especially the ones that have more liquidity. So Solana, Ethereum, and Bitcoin are certainly among them, but there are others, of course. The also not quite decentralized coin BNB will also see probably some gains in returns, as will others. Maybe Polkadot, maybe Doge, maybe Shiba Inu, maybe Floki. All these ridiculous meme coins in there. They're in the top tier of the meme coin world. They may see growth, but I certainly wouldn't be putting a stack or a big stack into them for the long term. Although that doesn't mean you can't trade it if you want to, as long as you're trading it properly with the VEPs, because there are definitely some decent gains to be made trading meme coins and meme tokens and ordinals and runes and those kind of things. But you have to keep in mind, those are all, really extremely speculative. Now, of course, all crypto assets are speculative. And honestly, all assets on markets are. That's what speculators do. They look for potential returns, and they look for the best possible potential returns that they feel comfortable risking capital on in order to see if those risks pan out. Personally, I don't really like to trade too much in meme stonks and meme coins and meme tokens. I like some NFT ideas, some NFT projects, really very few, but some. I like some ordinal projects. I think they're kind of interesting and have interesting potential as well, just like NFT does. And I like certain runes ideas, but at the moment, runes are really just a cash grab for the most part, and it's all about having the silliest possible name that you can have and getting the widest, number of holders to buy. And if you think about it, it's a tiny market still. Like, I think the single biggest rune only has like 100,000 or something holders. And if you look at sites like Luminax or any other site where they list them, you can see that runes are in fact really just one silly name after the other. And it seems the sillier the name, the more holders they have, except for maybe the very first one, the original runestone related one. It doesn't mean they have no potential, and it doesn't mean that they're not going to do well in some cases, But clearly, like 99.9% of them are just silly, and they're even worse than the .com bubble, where people were just buying and selling, .com domain names, buying them cheap and then looking for someone to buy them basically at a higher price, and flipping those domains as quickly as they could, creating such a bubble like we had in like 99 and 2000, where you had people paying $100,000, $200,000 for a domain, even $500,000. We even saw like business.com went for like $1 million just for the domain name. So, we're seeing the effects right now of the run up in Bitcoin's returns, and obviously the prices that led to a new all-time high, barely above the past one, and the tightening of the volatility. I don't mean the volatility of price, because that's not a thing when we're talking about trading, even though every analyst will lie to you or misinform you because they don't know any better. But that's not a thing, right? I'm looking at the volatility getting tighter and tighter and getting set for the next move on like the daily, the weekly, etc., on the different time frames, and of course lower time frames as well. But we're seeing the volatility at a relative low, and is certainly set to make the next move. Do I think overall the next move will be up or down? Again, I don't predict one way or the other. I look at the leading information while I'm trading. Can I give you a long-term forecast? Yeah, but with the disclaimer that it's meaningless, because I have great leading information for the long term, but the long term happens over the long term, right? So if I tell you we're likely to see, nice returns over the coming months on Bitcoin or Solana or ETH, those returns could be to the upside or the downside. It all depends on the VEPs. It doesn't depend on my feelings or my prognostication of will it go up or down, because I can tell you, sure, it looks like it's going to go up, but then if it goes down, do you think I'm trading it to the upside? No, I'm trading it to the downside, right? If I enter a position and the position goes against me, what do you think I do with it? I get out of it immediately, and if I see a reason to flip it, I do. If I get into a position and it goes the wrong side and it doesn't tell me that I should flip it, I get out of it and I wait for the next occurrence of opportunity. And if I take a position and it goes the right direction of my trade, I don't sit in it forever, right? I trade low time frame, which means I like to trade the 1 minute, but 3 minute also, 6 minute, 9 minute, 15 minute. I trade those time frames. Rarely do I trade the actual 15 minute, because for me that's a very long time, the way that I trade. But I typically am trading the 1 minute, sometimes the 3, and less the higher time frames. And it means that I don't really care about the higher time frames as a trader. As an investor, again, it's meaningless, because if I understand these assets the way that I do, with everything that I've studied about them and know about them, then the higher time frames, they're really moot, right? The returns are going to keep increasing for the time being, because the assets are still relatively new. There's still a whole lot of volatility to be played out for many, many years. There's still a whole lot of unknowns to be played out for many, many years, which is part of what causes the volatility when you have geometric Brownian motion, also known as randomness. There's also a whole lot of, price discovery to be done on many new assets and possibly on existing older legacy assets, right? They're not old, but they're older. Is it possible that we'll see Solana hit an all-time high this summer before the autumn hits? It's possible. And could we see a $500 Solana by the end of the year? Yeah, it's possible, right? It could even get to $1,000 by within a year, right? It's possible. But I look at the probabilities on the low time frames for Ethereum or for Solana or for Bitcoin or for any other thing, because that's where you actually get the occurrences of opportunity. And when you fall into the narrative trap as a trader of trying to guess your next move based on what analysts are telling you about the long term, you're harming your chances of trading properly, because you're poisoning your brain effectively with misinformation. Like, yes, long term these assets are likely to go up for a while, probably for many years. So it's probably not a dumb idea to put 1%, 2%, or however much you're comfortable you're putting in of your personal portfolio into it. That's not advice or anything. I'm just saying, a lot of people who manage wealth funds for families, etc., they're buying as much of this stuff as they can, and they're planning to buy it for years. They've said so publicly. So that means that it's probably not, the most foolish idea to allocate a small percentage of your portfolio, at least, that you can afford to lose if you happen to like investing. Most people don't invest, but it's, given the information we're told by this information industry, the long term looks bright. However, that doesn't mean there can't be a lot of short term and even mid-term downside. It's entirely probable we'll see it. And even if this bull run continues for another year and a half, right, everybody expects that at some point we'll see a dramatic pullback from wherever the all-time highs will be of this particular quote-unquote cycle, which again is nothing more than buy pressure or short, or sell pressure, right? There's really no bear cycles. There's really no bull cycles. It's just, are there longer amounts of time when it generally goes up or generally goes down? Yes, but it's only going up or down because of the returns, and that's only happening because of the buy pressure and the sell pressure. So, do I think Bitcoin can hit 100 grand by the end of this year? It's possible, but the VEPs certainly don't guarantee that. They show that there's probabilities to the upside. There's also a lot of probabilities to the sideways or downside. And I don't think it's, entirely wise to go in 100% right now and bet everything when the price could significantly dip, especially during the summer, right? We could see a dip this summer, in the Northern Hemisphere, June, July, August of this year, and then see a resurgence of price in September, October, November, and December. That's entirely possible. It's even probable, right? Well, again, look at the VEPs. Look at the higher time frames. You'll see there are significant probabilities that we go sideways or down in order for the VEPs information to reset at those higher time frames and get ready for the next move, up or down, right? And it could go down in order to reset for a further move down, or it could go down in order to reset for a move back up. We look at the probabilities as they change. We don't just sit in our position based on what we thought a day ago, a month ago, or whatever, right? It's an active, dynamic world. And when you're a trader, you shouldn't be fooled by long-term analysis. Get your long-term analysis, feed it into your brain, but compartmentalize it, and don't mix it with your trading, which should be on low time frames, in my opinion. That's it. Happy trading.